Assalamu alaikum. We are here to present a news article launching of Central Bank Digital Currencies in Pakistan. Introduce you with the great team of Radra. First up, myself, Dania Zahra. Then we have Manal Shahab. Next we have Ariba Hussain. And last but not the least, Aisha Sajad. So, agenda of the day is to give a quick article summary, acknowledge you with some concepts, implications of CBDCs, evidence supporting these implications, some challenges and solutions, and in the last, impacts on different sectors. Starting with the summary of our chosen article, launch of Central Bank Digital Currencies in Pakistan. Central bank digital currencies are different from cryptocurrencies. CBDCs are the digital version of cash and potential of physical cash replacements. CBDCs are backed by Central Bank of Pakistan as a legal tender, so they are more secure than other cryptocurrencies or virtual currencies. CBDCs are built on blockchain technologies, or we can say distributed ledger technologies. In 2018, virtual currencies are declared as illegal and prohibited to trade in, as they are not recognized as a legal tender, so they are not secured as CBDCs. Recently, SBB launched its first digital currency pilot sandbox within 2 months in an effort to strengthen the national currencies, control the flow of money, and facilitate financial transactions. Atlantic Council reported that only few handful countries launched their CBDCs, while other countries only have launched their plots. While Pakistan is working on launch of CBDC's plot, the regulators also covered the regulation requirements such as anti-money laundering, consumer protection, outsourcing activities, counter financing, and terrorism. This rollout of Sandbox by Pakistan's central bank is a landmark step for fintech industries with the consideration of security and protection. As we all know about the cybersecurity risks make the whole financial ecosystem vulnerable, central banks should give uppermost importance to the digital currency pilot sandbox and compile with concepts. What is digital currencies? It refers to any means of payment that exists in a purely electronic form. They are not secured by any central bank. What is central bank digital currencies? They are the form of digital currencies issued by a country's central bank. They are similar to cryptocurrencies except that their value is fixed by the central bank and equivalent to the country's fiat currencies. They are more secure than other virtual currencies. What is Sandbox? It can play an important role in fostering the innovation needed for overcoming the barriers for financial inclusion that keep poor and excluded customers marginalized from the format.
Moving on the implications of CBDCs in Pakistan, we have some positive and negative implications. Positive short-term implications: improved payment efficiency. CBDCs can make transaction faster, more secure, and cost-effective, leading to improved payment efficiency. Enhance financial inclusion. CBDCs can provide financial inclusion by providing digital payment services to underserved populations. Better financial management. CBDCs can enable individuals and businesses to manage their finance more effectively through with digital payment solutions. Some negative short-term implications: changes in liquidity creation, initial implementation cost. CBDCs can impact the way liquidity is created and managed by financial institutions. Developing and implementing CBDCs may require significant investments in technology, infrastructure, and staff training. Long-term positive implications on Pakistan's economy. CBDCs have positive long-term implications for economic growth and efficiency by enabling faster and more secure transactions. CBDCs can attract investments and reduce transaction costs. This stimulates economic growth and enhance overall efficiency in the financial system. Financial stability. CBDCs can provide central bank with improved tool to manage monetary policy effectively. By having more control and visibility over the flow of money, central bank can reduce the risk of financial crisis and promote stability in the economy. Innovations and technological advancements. CBDCs can indeed drive innovations in financial services and technology. Introduction of CBDCs paved the way for the development of new products and services that take advantages and digital currencies. This creates exciting opportunities for advancement in the financial industry and promotes technological innovations. Move on the negative implications. When we talk about the privacy concern with CBDCs, it means that these might be worries about how easily transaction can be tracked. This could potentially infringe on people's privacy rights. It is important to find a balance between the benefits of CBDCs and protecting individuals' privacy. Talk about the digital divide in relation to CBDCs. It means that not everyone has access to the necessary digital infrastructure to participate in CBDCs transactions. This can create inequality and exclude those who don't have access to technological. Supporting evidence from Nigeria, eNaira, and Jamaica. Expanding the coverage of eNaira wallet to include people with mobile phones, even without bank accounts, would increase financial inclusions and enhance implementations of social transfer programs. It could potentially enable up to 90% of the population use eNaira. Expanding the use of eNaira in Nigeria's economy has the potential to reduce informality by bringing greater transparency to informal payments and strengthening the tax base. This can benefit both informal and formal businesses through increased consumptions and improve financial inclusion. Around 17% of Jamaicans do not have bank account, which limits the safety and convenience of transactions. Digital pay wallet will provide an easier to access means, efficient and secured payment from one's phone. Using a digital wallet in Jamaica offers affordability with fee-free transactions as well as safety and convenience through password protections and device security. Additionally, there is an incentive for the first.
Here are some challenges faced by central bank digital currencies, which are monetary policy. Implementing effective monetary policy with central bank digital currencies can be complex, as central bank must balance the benefit of real-time data with risk of destabilization the economy. The second one is cybersecurity risks. Central bank digital currencies are susceptible to hacking and cyber attack, requiring robust security measures to protect against theft and fraud. The third one is financial integrity and stability, ensuring that central bank digital currencies are accessible to all citizens, including those without access to traditional banking services, is a challenge. Okay, now there are some solution of these challenges. To address these challenges with some solution, first we have diminishing role of bank and other financial institution by diminishing transfer of funds to e-wallet. For financial integrity risks such as monetary laundering, money laundering migrated by using identify verification system. The third and last one, to address cybersecurity risks, conducting IT security assessment or more data production with some global standards.
I am here to present the impact of CBDCs. The impact of CBDCs on banking sector. CBDCs offer banks the opportunity to provide faster, cheaper, and more secure payment services. They can also launch new products like digital wallet and investment option. Additionally, CBDCs can help increase financial inclusion and lower the cost of cross-border payments. On the other hand, disruptions. CBDCs have the potential to disrupt the banking industry by reducing the importance of bank in the payment system and increasing competition among payment service providers. This may impact bank revenue and deposit, potentially leading to slower credit growth. On the other impact on local citizen, Pakistani citizen can also ledger with the opportunity as they are secure to make transaction without being looted. Literacy. As we know, the current literacy rate of Pakistan is 62.3, which means that an estimated population of 60 million is illiterate in the country. The low literacy rate in Pakistan can pose challenges in the launch of CBDCs. It is important to ensure that the design of CBDC system is user-friendly and accessible to all, including those with low literacy level. CBDC's impact on monetary policies. CBDCs or central bank digital currency can greatly impact monetary policy. They offer central bank more control over the money supply and can make financial transactions more efficient. CBDCs have the potential to disrupt monetary policy by changing how central banks manage the money supply and implement interest rate policies. They could enable more direct control over the economy and financial system. Overview of CBDC's landscape. According to our CBDCs tracker, at least 64 central banks are exploring our retail CBDCs, of which 20 have been launched or tested or are in very advanced exploration stages. We say at least because our count is based on reliable public sources. However, according to the Bank for International Settlement, 58 of the 65 central banks surveyed at the end of 2020 were exploring retail CBDCs. In any case, the